Good morning, everyone. I hope you can all hear me okay. And just let's see if Duncan is on the call. There we are. Okay, just a second, guys. I just make Duncan co-host so he can moderate the room and let other people in. So where are you, Duncan? Okay,
good morning, everybody. Sorry if I caught anybody out with the
Hi, Duncan. I can't hear you right now.
Time thing. I can just about hear you.
Okay, just my volume.
I've got pretty poor bandwidth.
Okay, can you all hear me okay now? I've just sorry, I just put my volume up. I just really didn't realize. Yep, I was waking up very early, so I normally have my volume right down. Let me just okay, here we go. There we go. So let's get started. Now it's nice to see all of you on the call. Now some of you will be new to the call, so I'll just very quickly tell you what we're doing. So I normally concentrate on a few items of news, in the past week, and then we open the room up to question and answers. So really, we see what's interesting for you, what's relevant, and I'd like to, rather than hear me rambling for a whole hour about what I think it's important for me, then we're able to aim the conversation in something that can actually help you. Okay. So today, I think it's kind of like I'm only going to talk about two items because I think they're very, very important, and we need to discuss it because they can and they will affect every single one of us. Okay. Now, especially, the first item, for those of you, I don't know if there are any of you that are taking part on a call from the US, this will be very relevant to you because it's something that is going on in Congress right now. So let me start by sharing the screen. Let me just unmute somebody else. Okay. Okay. Can you all see my screen right now? Yeah. Okay. I always got this the Zoom tab at the top is covering all my tabs. I need to move it if I can. Okay. So this is about the infrastructure bill that's been going on, going through its process in the Senate and in Congress for the past couple of months. Today, there is another important vote in Congress, and apparently there is a very, very small amendment hidden in this 2,700 pages bill, which is absolute mammoth, that will have a huge impact on cryptocurrency and in particular in decentralized finance. Okay, and if you can see, there is been really, now that it's just really been found, because it really is kind of like a 10 word a line hidden away in 2,700 pages. So it's quite bad. But what is happening is that they are trying to put the same requirements on cryptocurrency transactions as there are on cash. So, for example, in the US, any transactions above $10,000 must be reported to the authorities so really with all the information about who did that transaction. So that implies know your customer, KYC, as you know, and a kind of a certain process for reporting these transactions. Now, the digital asset transactions have been equated to cash transactions for that purpose, and for the purpose then of this bill. And so we'll make anybody that doesn't report these transactions to the authorities, that will become a criminal act. So it's quite big, quite important, especially if you are in the US or you are domiciled for tax purposes in the US, this will affect you. Okay. Now, what's the problem here? You say, well, what's the problem? We just need to report this thing, we need to report some detail. The problem is that these are decentralized applications. Nobody has this data. So they are creating really a law that is not possible to comply with. Okay, so what would be the effect of something like this? First of all, it's kind of like, in a way, criminalize a lot of people that have interacted with these protocols. Two, will be pushing a lot of these protocols away from the US. So, as we've seen, impositions and regulation doesn't stop anything. It just moves it away, especially with something like this that is decentralized and is, happening all across the world at the same time. Yes, you might stop, for example, Binance operating in the US for certain aspects. But has that stopped Binance? Has it regulated? No, it hasn't. It's just gone, okay, fine. We're not going to do that in the US. We'll still carry on as normal in the rest of the world. So do you think that this will stop decentralized finance? No, it won't. It will just simply, move the innovation away from the US into other countries. But what is the other things that are hidden into this? It's kind of like exceptions to the rule. So where everybody has these reporting obligations, for some reason, banks and financial institutions don't. Now you were thinking, well, what was that about? And you might be asking a good question. A simple question like that is important. Now, we've been holding this room, Duncan, by how long? Since April, May. So we've been going on quite a long time. And I've been talking to you ever since then, thinking, look, just be ready for a fight back from established power. And banks, financial institutions represent established power that has been in place for decades, if not centuries. So what's happening at the moment is that, and maybe I can show you, I'll load up and I'll show you this. It takes a little while to load up, but I want to show you what's happening in the decentralized finance right now, okay? Once it's loaded up. What's happening is that a lot of money is moving from the traditional channels to crypto channels. So although it's still pretty small, crypto is still pretty small. It's really the size of Apple stock, if you can think about it. The whole crypto market. Although it is almost like $3 trillion, it's still small compared to the size of the regular investment, the stocks and shares and bonds and derivatives. It's still kind of like a tiny amount, but it is affecting the margins of the banks and financial services can get from their investments. So, with something like this, basically, that is saying that a decentralized application could not operate in a certain way, but a bank could. So what would that mean? Is that, well, now we have crypto, we have these fantastic things, but now you have to go through a bank to do it. So, again, you're keeping them in the middle of the center of power. So we're trying to do things to eliminate a third party. This is all what crypto is about. It's about giving power to the masses, okay, power to the users. And what is happening is that, well, actually, yeah, this is kind of like, oh, it's nice to have that, but what about if we do it for you? In the same way that, the king many centuries ago was thinking, well, all this gold is nice for trading, all these coins are quite nice and shiny, but we'll do it. We'll mint the coins for you. We'll decide how much gold goes into each coin. Okay, so the kind of like is a start, the beginning of the end in a certain way. So this is very important. I just wanted to understand what games are being played behind the scenes, because this is important. When you read these things, it's not so much what is being written, but why are they doing these things? Who's pushing? What are the lobbies pushing to have these things added to these bills, especially when, you know, these are not really, you know, they don't have any discussion because they're being inserted into another bill, and this is kind of like an infrastructure bill, which is massive. And it's not, I mean, really, one thing that we can say about the growth of crypto in 2021, this would deserve at least its own bill. If they were to do regulation right now, there will need to be some proper discussion involving, you know, crypto players and the authorities on one side and another. So there need to be at least a few months of discussion to understand how this can be better done. And we've heard, you know, Coinbase openly go against the SEC, saying, well, come on, just come out and tell us what's possible to do or not, because we can't just make it up on our own, and then you decide, no, that's not possible, we're going to fight you in the courts for it. It's not a nice way of doing business. And many different now crypto projects, they're actually starting to become politically active, and they already said that they will support, you know, at local elections, national elections, they will support candidates that are crypto friendly. And so this is now starting to become, you know, worthy of note from the politicians, because if they don't have money, or if they fight anybody that's got more money than they have, then it will be finding it difficult to be re-elected. So now they are starting to take notice. And if you are in the US, you might have heard of the Forward Party that's being created, which is not so much as a political party, but it's going to be kind of like an influence group, which will be a voice for crypto, and again, distributing funds and votes to candidates that are more friendly to the crypto world. So this is starting to get serious. So crypto is starting to get into politics now. It's not just, you know, kind of like these hippie communities in a way on one side, and, you know, the establishment on the other side. This is starting to get into proper politics right now. So it is something that, I mean, if you are in the US, this is something that should get you to write to your own representatives in the, you know, House of Representatives, in the Senate, you know, your local, wherever you can write to. This is something that you should say, not in my name, really not in my name. I don't want this to go on to be approved. So if you have any power to do that, then this is the time when you should use it, and quite quickly as well, because you need the power of the community to be felt, and from these people to know that you're going to have somebody that is against you if you support this with your vote. Okay, this is where we got some power now. And so it's one new pieces of news, really big. And the other piece of news is Facebook. And they announced, as you know, they're becoming Meta, kind of like a really pushing hard for the metaverse. Okay, now this is great. It's the first big company that's going really all in into crypto and this kind of like this Web 3.0. How many of you understand what the concept of Web 1.0, 2.0, or 3.0? Can I have a raise of hands? If anybody knows what it is. Okay, let me just go very quickly to understand you know, why this is important, one, and two, why it is disturbing. Okay, so it goes into the same narrative as we were talking about with the talking about the bill in the US. Web 1.0, because I mean the internet has been around since the early 80s. Okay, so at the beginning it was, you know, the first version of the internet, kind of Web 1.0 as we describe it, is basically was a read-only internet. So you had many static pages on the internet that were not updated very often, and it was dominated by journalists really, because it was kind of like people, they had the content, which, you know, kind of like newspaper, magazine, journalists, they would then put their content on the internet, and for us to read it the same way as we were used to reading magazines and newspapers, we can now read them online. Then the second version of the internet, and all these new versions, by the way, are are basically enabled by an improvement in technology, okay, by new technology being available. Because of each stage, there's a much there is a lot more data that's being processed, and also there must be some technology that is enabled. I mean, the big change with Internet 2.0, Web 2.0, was the introduction of JavaScript. You know, that allowed us to see the website that we see now. Like, for example, here we're seeing this. You know, we're seeing this as going on online, so it's not a static website, but there is already more interaction. But the big change that was brought in by the Web 2.0 was the fact now it wasn't just read only, but it was write and read and write. Okay, so where the users of the internet are now also the content providers. And then we'll see, for example, you know, in your Facebook page, when you create a Facebook page and you put content onto the internet, so you are now a provider of information, not just a user. Okay, and this is kind of has been a huge change, because we start with, you know, we see the start of social networks like you know, Facebook and MySpace before, and other Instagram and other social networks, and we are seeing a lot of people, and then they have started provided content for these. But at the same time, there are some limitations. One is that this information is owned by the networks themselves. So, for example, everything that you put on Facebook, maybe the pictures of your baby, you know, you going out with friends or whatever it is, or your very maybe very controversial political opinions, are property of Facebook. They can do whatever they want with it. They can use it for advertising without asking your permission or anything else. It's their property. Okay, as simple as that. And two, this information is not transferable. So, you know, if you want to be on several social medias, then you have to have separate accounts. So you have one account for Facebook. I know that Instagram now is owned by Facebook itself. One for Instagram, one for Twitter. So they're all separate accounts, and they don't really talk to each other. Okay, and at the same time, you know, now it's become possible for, you know, especially during the pandemic, many businesses have started new ventures, new businesses. They don't even have a website content anymore. They are directly on, maybe they use Facebook as the main way of interacting with their customers. So they have kind of like a Facebook presence, a Facebook shop, you know, and they, that is the way they spent a lot of money basically to have the presence. The moment that they wanted to say, well, actually, I'll move my business from Facebook somewhere else, that causes a problem. Because again, those communities that are being built, and you know, many people, maybe, I don't know if there are any people here that have got Facebook businesses or YouTube influencers, for example. They have built YouTube channels with hundreds of thousands, if not millions of viewers. And they are at the mercy of these companies that own their data. Now, it's not easy, say, to move a community away from Facebook. If you're on YouTube, you then are really depending on YouTube's algorithm to monetize your channel. And if the algorithm changes, you might lose a lot of your income. Or if they decide to close your channel down, let's say you've had it. So you might have taken years to build that kind of to build those viewing figures, but now they're not. You know, you can lose everything because it's their decision, it's not yours. It's their data, it's not yours. Now, when we come to Web 3.0, then we have read, write, and own, which is the own is the main issue of Web 3.0. When now you own your data, you own your, even for example, you know, if you use, you know, who doesn't use Google? You know, not just Google, you know, just looking at when you log into Gmail, it's telling you that there are like 1.3 billion users of Gmail itself. You know, a lot more users are people that use Google for their search as a search engine. So again, everything that's on Google, everything that you use Google for, it's information that they use and then they market and they sell. So just for example, your information to Facebook, it's worth about $200 a year. Yeah, I don't know how many of you know that. So just using Gmail, because by the way, Google reads all your emails and uses to market products to you. Okay, so all the content of your emails is used for the algorithms to then know what your interests are, so that they can, all your adverts you see on Google depend on your search history and depends on your emails if you use Gmail as your client's email client. So wouldn't you rather have control of your data online, knowing that your data is only shared with companies or people that you want to share it with? Or if you want to share, if you want to make it public, wouldn't you rather get the benefit of that rather than Google? Wouldn't you rather get paid $200 a year just to do your browsing rather than this money going to Google? Okay, and this again is a big issue, because what we will see now is that what Facebook is saying, actually, guys, we're going to lose some influence here, like people using these new blockchain related metaverses and social networks. So people will see that it's more advantageous to be on those places rather than on Facebook, and they want to find a way of controlling this traffic. So this is what this big movement into metaverse is for Facebook, is that actually we want to be at the center of this, and we want to benefit from this change, okay, which obviously they present as a 3D social media. But at the same time, I mean, you could use, many of us now work from home. I can see in the near future there being virtual offices where you have your avatar that's sitting at a desk in an office, and you can interact with the other people that may be sitting all over the world. But you can get up virtually and tap somebody on the shoulder and ask them a question the same way that you would do in an office, for example. So this is coming into our life, whether we like it or not, and this is going to be the way that many companies operate now in the near future. Now the question is, would it be benefiting the few, or would it be benefiting the many? And this is a big question, because one thing is that, do we want a Facebook to benefit by billions and billions every year by our activity, or do we want this value that's being generated to stay within the community? And this is what crypto is about, guys. Okay, crypto, if I can describe it in very, very few words, is benefiting the many rather than the few. It's kind of like democratizing transaction value. Okay, so and Facebook has been in the news before this because of the way they were dealing with their data, because it was showing, by people involved with Facebook, were saying that their decisions were not made for the benefit of the users, but they were made to maximize the income. Okay, so do you really want somebody that has got their own interest at heart to be in control of even more they can control nowadays? Because we'll be using our computer more and more and more as we go through, as we go towards the future, and what this new technology called blockchain allows us to do online. So, big thing to think about. They're not small things. And another little bit of news, by the way, that's, for those, I know that many of you are in Australia right now. The biggest Australian bank is going to start allowing crypto trading. So this is going mainstream very, very quickly. I thought that it would take a couple of years to get to this point, but it's coming to a corner near you very, very quickly. Not just, it's good that you're in this place, in this room this morning, but please invest in your education in blockchain, not just in cryptocurrencies, not just to make money, because this is going to affect very many aspects of our life. Okay, so invest some time into learning about this, because you're going to have to do it anyway. But now it's still early days, so you can, if you learn early, you can benefit from it. Later on, you're probably just going to have to do it, and maybe even pay somebody to, to learn this stuff. Yeah. Okay. So I have managed to talk about, half an hour just about two little things. We can call it like that. So let's start now opening the room up to questions. Okay. Duncan, I'm relying on you to bring
Okay, absolutely. Yeah, just unmuted myself there. So a reminder to all new people as well. There are quite a few new faces on the call here. This is your opportunity to get your questions into Luca. Drop them into the chat, or indeed, put your hand up and unmute yourself and chat away. There's a question from Dana. Is there a US Pro Crypto Trade Association one can go to get templates and action tasks for the build to be fair? Not sure. Sorry, Dana, I didn't read your question in advance, and I read it out in a way that doesn't make sense to anybody, I'm sure.
No worries. I'm happy to ask it on my own behalf, Duncan, but thank you. Luca, usually in the US, when there's an action to be had, there's generally an activist group or a trade association or something that you go to and you see the template and you see the representatives who are sitting on which committee, and it kind of cookie feeds you because, complex thinking doesn't work for all Americans. Is there a trade association or someone that you know of or trust that I can go there? Because what I'd like to do is actually also blast this out on my social media feeds to get my peers in the US who are citizens to take action as well as myself.
Yes, there is I can't remember, I've got to refresh my memory because I can't remember the name, but there is a solicitor. There is a solicitor that is gaining traction, as there are lots of crypto projects that support his association that is lobbying heavily for crypto. I can't remember now the name of his association or his name, but it would
when
come
it pops up, maybe you can just ping it on the email or share it, and that way I can try to mobilize folks that I know. And then secondly, can one assume, if this doesn't fall in the favor of those of us who fortunately or unfortunately have US passports, can one assume that CoinStats or CoinGecko will allow us to put our APIs in, and there'll be a consolidator to help us with the tax burden? Because I wouldn't know where to start to figure out what taxes I would owe.
Yeah, there are taxes. Crypto tax software out there that's available to work it out. I mean, sometimes the API connection sometimes works and sometimes doesn't, depending on the software that you use. So often it is better to download the transactions and load them manually than using API connection. And also, it makes me uncomfortable to have for those basic API connections, it's kind of like somebody that can log into your account and download your transactions automatically. Okay, so it's a backdoor into your account. And although you give them limited permission with the API key that you give them, it still makes me uncomfortable because it's kind of like somebody else that has your data and you don't know how secure they are. You can control your security, you can control their security. So I prefer to download my transactions and then load them manually. Now, CoinStats, Coinly, there's hundreds of software items, and some of them are more geared towards one particular country. So just look them up and make sure that they are fully compliant with with the US tax requirements before you start working on them.
And on that API insecurity lesson you keep reiterating to us, and I am listening, can I just disconnect my APIs that I did set up before I met you, and then it will store the current data, and then when I make purchases, I'll just do it manually? Because there've been a lot of purchases that I'd hate to have to re-enter all manually.
No, it's not that you have to enter them manually. You just have to download the transactions and then upload them onto the software. You don't do it one by one. You just do it by an Excel file. Of transactions.
So CSV up and down. So I'm happy to disconnect my APIs because this is about the 5th time I'm really taking notice of you saying it. But my question is, if I disconnect it, will it lose the content that's already up there on CoinStats?
No, it won't lose the content. Just basically CoinStats, whatever software you're using, connects to your account, so downloads the transactions automatically. So the moment that you disconnect, they won't be able to download anything anymore because they don't have that access to your account.
But it will keep what's up there. Awesome. Thank you for that. For both.
I'm not a programmer, so it may be completely safe or whatever. I'm just a bit paranoid about online security. That's all.
download them first before
Bellamy
you disconnect.
Sorry, what was that, John?
I was just going to say, I would download it, anything first before you delete it or before you remove anything. Just download it first, just in case.
And John gave us 2 links, Luca, as well for associations around crypto, in case your monkey mind doesn't remember the advocate you're referring to. So I'll get into there. He put them in the chat.
I'm sure there are others. They're just a couple that I know that are in the US. Hey Luca, just out of curiosity, have you, like, in the cyber intelligence space, we're hearing a lot of chatter and stuff in the background about Biden, and I've shared some of this with Mark and the IOW community. Biden's really pushing back on crypto. He's really trying to, as we've noticed, he's really trying to get control on it because of, through Russia and, you know, the money laundering and the hacking and all of that going on, and where they're actually getting their payments. Have you heard any other stuff on your end around that?
No, I mean, it's quite clear by what they are doing that they're a lot less pro crypto than the previous administration. Now, say why are they doing it is, well, okay, one is the reason they like to tell you why they're doing. But it's never what they say it is. It never is. I mean, the way I see it is that one of the most powerful lobbying groups is the financial industry's lobby. So they seeing that I mean, just see it, guys. I mean, Coinbase can offer returns that the banks can only dream of, and if they have the same protection. Because they have the same banking protection, Coinbase now. So yeah, exactly. Why wouldn't you? You can now have your salary paid into your Coinbase account. You can get interest of 4% on your deposits. You know why? And you can use pretty much your Coinbase account as a bank account. So why wouldn't you do it? Why wouldn't you do that? So if they can't fight with that, they need to find another way. By the way, another announcement that Coinbase did is that they are trialing a subscription service where you don't pay any fees at all for your trades. So that's another thing that would take a lot of traffic from the Robin Hoods of this world. So it's kind of taking away all the reasons for not interacting with crypto. You know, if you got protections up to $250,000 on your Coinbase account, the same as you have with your bank account. So really, if you know about it, if you understand a little bit of it, you say, why wouldn't you? That's the question. And the reason is now, obviously we got all these financial companies that they handle trillions of dollars. Obviously they have a lot of power, and this is kind of like traditional power. And they don't want to lose their position of power, because that's how they made their money. You know, if you understand that traditionally banks have access to returns of between 10 and 20%, and they pay you 0.1% on money that you deposit, then you understand what they are bound to lose. You know, and all these institutions have huge costs because, you know, they have bank branches, you know, they have lots of staff, they invested a lot into systems. So they don't need to lose everything to go out of business. They just need to lose a little bit of their margin, and they become unprofitable. So it's something that they are fighting right now, because it makes a difference to the bottom line. You know, just losing 2 or 3% of margin can make the difference between them being profitable or not. Because we're talking about, guys, banks don't deal in percentage points. They talk about basis points, which are 0.01%. Okay, and they think that, you know, a good deal for a bank is something that can earn them 10, 15 basis points. So you take away that 0.1, 0.2, 0.3%, and many of their deals just don't make sense anymore. Okay, so this is the battle that they're fighting. So they want to keep the river flowing. Yeah. So that's how I see it. And obviously, you know, they've got a lot of influence between the legislators, because in America you get elected by having more money than your opponent. money to spend on your campaign. So who pays for their campaigns? You guess. You guess. Oil, energy, tobacco companies, financial services, you name it, or interest groups are paying for senators and members of the House of Representatives to be elected, and even other things, even judges and other local government, etc., etc. So yeah, this is what's going on right now. People that have power, they want to keep the power. Simple. Okay. Any other questions, Duncan?
Not in the stream, although I would like to just thank the new people on the call. I think most of you have dropped your email through to me. I wasn't really clear. I said, I've got some news for you on Monday, and they probably thought, is it your birthday? I did mean news on Luca's behalf to do with cryptos. So just to be clear, I'm not collecting email addresses for myself. So it is safe and we don't spam you or anything. It's just that, we like to stay in touch once you're part of the family. So no, but please feel free to either unmute yourself or drop questions into the chat. I've got a question to keep us going, if I may. Is it true, because I know you can't believe everything you read on Twitter or anything, is it true that Tether just minted $1 billion worth of Tether, and it's widely believed that they've got no assets to back this up with? I know this is an ongoing thing with Tether, but apparently they just minted $1 billion.
Well, generally, what they say with Tether is that their thing, at least what they did say before they got found out, is that every Tether is backed by a dollar in a US bank vault. Now that doesn't seem to be completely true. So it seems to be that some part of Tether is not fully collateralized, and that's what the regulators are trying to understand. And this is probably one of the places where regulation will be welcome, because we all use stable coins because they provide liquidity and make it possible to trade cryptocurrencies. But those really are centralized products. Whether it's Tether, whether it's the Coinbase, USDC, whether it's other stable coins, they kind of like a necessary evil of trading cryptocurrencies. And so if somebody says, for each Tether there should be a US dollar, then I think it's perfectly legitimate to ask as well, show us your books. Where are these dollars? And when they start saying, well, actually, we don't have dollars in our US bank vault, we have debt positions in commercial paper. Okay, so that is commercial paper to me and you. Is something a debt of a company, and that company can go bust and might not be able to repay their debt. So how valuable is that? Commercial paper is only as valuable as the strength of the economy behind it. If the economy goes down, and we're going through a recession, and companies start seeing less profits, then their debt is less valuable. Okay, so, and if there was a kind of like a bank run, the same way we've seen a bank run, for example, during the pandemic, but in crypto terms, so people wanted to get their money out of Tether, they might not be able to get all their money out. There might not be enough US dollars there to back all the Tether there in circulation. So, but I say it's still a very, it's still the main stable coin, and it's still the most used stable coin for trading. And it's fine to deal with it for short terms. I just wouldn't hold Tether in for the long term. So be careful with that. If you need to have stable coin positions, I would look elsewhere. Maybe USDC, maybe some of the algorithmic stable coins like DAI, for example. Cardano just come out with coming out with an algorithmic stablecoin called DJED that's being developed by Coty. So there are other possibilities out there. If I would be careful in holding a lot of your value in stable coins, and if you do, maybe spread it around a few different projects. There are plenty of stable coins out there. There's Gemini, there's Terra's, There's stable coins. There's really Paxos, so many different ones. Just don't hold Tether long term. But it's safe to have it short term.
Thank you. So Julie's raised a fair point. Now that you've terrified everybody, what we're wondering is, well, does that mean that we need to stop running our groups on Facebook and we need to stop streaming crypto out via YouTube? Or is this more a sort of personal privacy issue that we don't really have to worry about? I mean, Julie's point, and she made it in a private message to me, but I'm going to go public with it because I totally agree with her. Can you just clarify? So, for example, we've got our private gaming fund that some of us are involved in, and the updates are on Facebook. Is there any inherent danger in that? Should we be avoiding doing that? And should we maybe be using encrypted email to communicate with each other? Or is it not really about that? Let us know.
It depends on how secret your communication is. So if it is something that is sensitive, then it should be encrypted. Simple as that. I mean, what we're talking about is not really critical. There are no details. There is no data, apart from talking about something and giving some numbers, but there is no danger in share. Even if somebody was to look at that, they wouldn't. You're not compromising in any way. But if there was something where you put in your account numbers and other things, then I wouldn't have it on Facebook. Definitely not. But the point is, the thing that I was trying to make you understand in a way is that when we all got involved in these things, that was the only way of doing things. So there was no alternative. So it's just that we all got involved and everything grew and grew and grew. But now we're starting to understand how, what power these big organizations have on our life. And again, as we are saying, Bitcoin has become very favorable because people understand that we want to have control of our own finances, or our own value, even finance. We're talking about the value that we created, because money is a representation of the value that we create. So as it's understandable for money, and this is why people are moving to cryptocurrencies, because they're going against from the money printing of many governments for their own for their own currencies. The same thing now is applying to other fields. And one thing is, big field is, because we are all on the internet, we all part of social media, different social medias, and so on, and we run businesses on the internet. So, when you start thinking about it, and I've had people that I personally know, they are being cut out of, for example, YouTube, and that was their main income. Okay, so then we're saying, where do they go from here? Because they're taking years to develop that business, and now somebody like switch it off like this, and it's we've seen it in a different field. We've seen it with supermarkets, with the physical products, where kind of the presence in the supermarket, they have that power. They become more important than the brand or the product itself, because you can have a brand that is as strong as you want, but if you can't find it in the supermarket, then it's very difficult to buy it. Okay, so now it's almost like the same thing online. When you think about it, you might have a very good website with lots of traffic, but if Google cuts you off, or the search engine, and people can't find you, it's basically, it's a huge problem. And we've had an example of this during the US elections, where there are some social media that completely cut out the president, Donald Trump. And so they couldn't use kind of Twitter, they couldn't use Facebook, you couldn't find some of its favorable groups on the internet. So who's making those decisions? This is a really important question for democracy, because it's not that I am a supporter of Donald Trump, but I think we all have there is free speech, which is very important to protect. So are you comfortable with Google, Facebook, and Amazon deciding who's worth who can have a voice and who doesn't? This is really, really important, because then all of a sudden we realize actually these guys have more power than a lot of national governments, and they are unelected companies. They only operate to they're only responsible to their own shareholders. So their main interest is in getting as much value as they can from their products. So I feel very uncomfortable with this. And as I said, in the past, this was the only way that we could get online, the only way we can do things. But now it's kind of with Web 3.0, we're starting to realize actually there is an alternative. There's a different way of doing things. Then you're thinking, okay, what's preferable here? And at the moment, it's still very early days. So some of these other projects are clunky. They're still not fully usable the same way that we use Facebook and Instagram and so on. But the work that's going on in the background is massive, and it won't take long for those products to be as easy to use and even better than the Facebook of this world. I mean, we're talking here also about investment, okay? And often I get a lot of people every week ask me, oh, what do you think about Dogecoin? What do you think about Shiba Inu and all this? And I kind of I try to explain to people that there are two things, okay? One thing is price, and you can look at price in the charts. You can spend all day in front of charts looking at graphs of price that goes up and down. Or you can look at products. And the thing is that the product development activity is completely detached from price. So during the crypto winter of 2018, 2019, the product development activity was very, very active, where the price didn't do anything. Okay. Now, it doesn't mean that if a particular product is seeing a lot of interest and is seeing its price going up a lot, it doesn't really mean that from what they can offer, there is any improvement, there is anything behind the scenes. Okay, and this we're seeing, for example, with all the meme coins, whether it's Shiba Inu, Floki, or Dogecoin, or whatever. So the only way you can benefit from those coins is by somebody else buying them from you at a higher price. So you're trying to find the idiot, basically, that holds the coins at the highest possible price, so you can get out and make a lot of money. But this is kind of like a zero-sum game. Your gain is somebody else's loss. There is nothing you can do with these coins apart from holding them, hoping they go up. If you buy another coin like Ethereum, whatever, another one of the projects, there is a reason for holding those coins, because they are doing something. They have products, they have got development. So you are buying kind of into the early days of a particular technology. The same way as you were buying into Amazon, when it was starting to develop. And the other thing is that if you look at price, you will miss the majority of the gains, because everybody's saying, well, if you had $1,000 invested in Amazon, whatever, how many years ago, now you'll be a millionaire. But the question is, if you were doing it as a speculator, would you still have those shares now? Let's say that you bought them on the very first day that were available, possible. Would you still be holding those shares after they lost 94%? Or would you have sold them to cash in on your gains? And that's the big question. So if you don't understand what's going on behind the scenes and why you should hold certain assets, then you will miss the majority of the gains. Because one thing that I can guarantee you is that any one of the cryptocurrencies that you hold at some stage in the next year or two will go down at least 50%. And so what do you do when they go down 50%? Do you sell? Do you stay? And this is the thing. You can only make that decision if you're informed about what goes on behind the scenes. If you just look at price graphs, you just go with the mass, and to whatever the majority is doing, you'll jump in and do the same. And we'll see. I'm not being funny, guys, but there are more people buying Bitcoin now at the historic high than there were when it was like half the price. So FOMO is a big thing in markets, and there is more interest in Solana now at $240 than there was when it was 120, 130. This is the way they go things. So you follow the mass, follow your friends that say things on Facebook, and this is where you end up. You're going to end up buying things at the top and then selling them, panicking when everybody else is panicking, and when they are just at the right time to buy, you'll be selling. At the right time to sell, you'll be buying. So this is the way markets work, really, and really the way that the whales operate is they create little panics when they want to buy something. So they'll basically they make sure that the market goes down by that 15, 20, 25%, so they have a nice entry point. And then when they see that the panic has exhausted, people have stopped selling, then they buy. And they carry on, and then the cryptocurrency carries on making new highs and so on. So this is how, before this growth that we've had in this past couple of months with Bitcoin, for example, this is why most people that bought Bitcoin in 2021, although Bitcoin had doubled in price, most people lost money on it. So you tell me how that's possible. Okay, and this is exactly why it is possible, because of panic buying and panic selling. Okay, so there's no other way that if you bought and still held your coins that you could have lost any money, but buying and selling following the panic or following the greed is the way to lose money, and it's very easy to do in crypto. Okay, I don't know if this was a bomb that I dropped or anything else. I want to make you more or less likely to invest in crypto, but if you zoom out and you take things calmly, I think it's very difficult to lose money.
Absolutely. So questions, guys? A couple of late entries. Jonathan's arrived late, and I also noticed, I don't know if he just popped in and out, but I saw Andrew was here. He's always good for a question. I think you just missed that last bit of Lucas, Andrew, and it was a good bit. I'm
just waiting from Andrew for a question about Shiba Inu.
Totally, yeah. And sometimes for new people, I may seem rude. I'm constantly ribbing Andrew because we're colleagues and we work together every day. And we're constantly talking about prices and looking at charts and going, oh, have you seen this one? Should we buy it? So, while I was biting my tongue listening to Lucas speaking, I was hoping that Andrew would catch that as well, but never mind. All quiet today. Got held up on a call, sorry. So no questions from Andrew, and Jonathan's been listening on the stream. So anybody want to just take the floor for some of the last few minutes? On the points that Luke has raised, no obligation, I
can say hello. Hi, everyone. So just on this whole matter of privacy and functionality, I've just signed up for or been accepted onto the Atala Prism course, which is Cardano's decentralized identity and self-sovereign identity course, which is very exciting for me because it's a really practical, functional use of blockchain that isn't widespread yet, and it's exactly what Luke is talking about. It's the future of taking control of your data and not having it anybody else's exposure or being controlled other than by yourself. And some of the tech and some of the use cases that they're talking about are just really exciting. So, the idea of having not just your conversations and photos of your babies controlled by third parties like Facebook, but actually having your health records and your national identities, your passports, all these sorts of things can actually move from the domain of big tech, from governments into your own hands. And Luke is exactly right. It's the adoption now, the real value within crypto, within blockchain, is only just sort of coming to the fore. So keeping your eyes open and spotting the projects that are working in that sort of field is really where the value is. That's what I'm seeing anyway. So
it's very important to say, Jonathan, as well. This technology is it's not out there for the future, but it's being used right now. So it's being used already in action with Ethiopia, for example, and they got 5 million users being on board to the blockchain exactly with the Atala Prism. They just signed a memorandum with Burundi and also with Zanzibar, which is kind of like an autonomous province of Tanzania. So it is kind of like happening in a lot of countries that are not as invested into existing systems as we are in the West, but they can see the value of of these new systems and what will allow their population to do. We've seen, I already told you before, we've seen in El Salvador, in weeks now, we have more active Bitcoin wallets than we have bank accounts. So people that never had a bank account, now they have a possibility of doing transactions on their phone with the Bitcoin wallet. And it's something that was never possible before. And this only took weeks, really. And not only that, but this is something that probably many people wouldn't know, but the next step for El Salvador now, they are building their administration on the blockchain, and it's being handled by Algorand. Algorand is one of the main projects that deals with the CBDCs, since central bank digital currencies. They're doing one for the Marshall Islands as well. So it's very interesting, lots of activity there, but this is something that's going on, whatever the US decides, whatever the UK decides, it won't stop this activity going on in Africa because it's improving people's lives. And although Burundi has, 0.3% of New York's economy as value, they have 12 million people living there. So the life of 12 million people that could be changed on the ground floor. It's huge, and for these people, a $1 transaction is a big thing, and being able to do that, it's directly using your phone is really a big change for people's lives.
Very nice.
I just dropped the link to the African focused page within Cardano, and that links through to a lot of the different developments that are going on in and around Africa. And it's some of the most exciting stuff is in the countries that we're not part of, ironically.
Yeah, it's great. It's great to see. What I really like about Cardano is just it's great to see how people's lives can be changed by this technology. Literally, it's not just a game to make more money. This can really change the world, and becoming more inclusive. To include the more than 1/3 of the world population that's excluded by the current financial system, for example. For being connected, almost half the world population is not connected to to the internet. More than 1/3 of the world population doesn't have a bank account. And this is a way that we can manage to bring them into the modern economy, because also these people, they are not part of the world population, generally are very young and very tech savvy anyway. So they can bring a lot of value to our aging communities in the West. Okay.
Wonderful. I'll mention it in case anybody's not keeping their eye on the chat. I gave you my email address. I know I'm a bit obsessed with this, but I have got some good stuff coming up for you, or we have. It's duncan@geniusu.com. So if you don't already have it saved, if you could just add that to your contacts list, it will save our non-spam emails falling into spam because your inbox doesn't know me. And that's it. There aren't any more questions in the chat. If anybody who's got any very, very late calls, then do let us know.
In the chat box, it was that single box.
I see. It was something that Carol shared, and then afterwards she actually said to me, "I meant to send that in a private message, so could you delete it?" So I was a bit reluctant to get into it, but to be fair, it's not anything specific to do with Carol. I don't. Luca, have you seen? I've seen services like this. This company web catalog seem to have all-in-one message platform, so that you can link all your different platforms and get everything in one place. Personally, I used to use Hootsuite myself years ago when I had lots of different Twitter accounts and things like that. I actually find, depending on the kind of person you are, for me, they're more of a hindrance than a help. I like to have all of my things on a separate platform. When I start putting everything in one place, then it really messes with my mind. But Luca, do you use anything like that?
No, I don't actually. I don't have any experience with it either. So it's good to know. Carol, was it Carol?
Yeah, she's gone. She's had to go to the micro school.
yeah, it would be good to know about the the experiences she has with it. Maybe she can share it with us on another call if she finds it useful or not. At the moment, there are so many things I'm looking at. That's not one of my priorities, to be honest.
That's the problem, isn't it? I'm actively trying to forget things because I'm kind of really starting to run out of room in my brain now. So things that I really don't need, I'm actively trying to forget to make room. Well, thank you very much to everybody. Really, really nice to see some new faces. And if you've had a good crypto hour, then please do look out for our email and invite people. You know, this is an open hour. You don't have to be part of any particular program or community to come along here and get the benefit of Luca's time and experience. So please feel free to share our Zoom link. Also, one thing that I do want to do, should never forget this, but I do. I'm just dropping.
Sorry, Duncan. Is it the same link every week?
It's the same Zoom link, absolutely. And I've just now dropped into the chat. This is the link for Luca's community on GeniusU, his circle, we call it. You know, his group. Please do jump through there because you can catch up with old calls. You can get, you know, notifications when we list new events and things like that. So come along and join the community, Crypto Investor Club on GeniusU.
Also, I'll just added at the end, this is my Calendly link. What I'm going to do at the moment, there is no availability because I don't normally have I don't normally have it open. I will make between 10 and 12 each Friday available if you want to have want to discuss your crypto affairs with me personally, not obviously with everybody else listening. So I will then, I will now create availability every Friday between 10 to 12 UK time. Okay, so really an hour later after we finish this call.
Marvelous.
Okay.
Well, okay. Thanks again for everybody for joining us, and from all of us on behalf of the entire audience, Luca, thank you very much for your hour and all of your extensive research and news, because none of us have got the time or the wherewithal to do it ourselves. Thank you.
Okay, thank you. Thank you very much for taking part and coming on the call. Okay. Good.